How in the hell is anybody supposed to trade this when the S&P 500 is moving 250 points in a day? News everywhere, tariff this, tariff that. Good morning, traders. I'm going to show you exactly how to do that. We're going to take chaos and we are going to have clarity. So today's theme is crash trade. In the last video, it was entitled Crash Strategy. This is how we're going to make money over the course of the next couple of weeks. We need to let the dust settle. We're going to get into that in just a minute. You can see in the overnight session, S&P down to the low from yesterday. Lots of volatility in here. The tariffs are going to be going into effect today. So the market is very, very nervous. Before we get going, let's take a look at my previous picks. By the way, thank you so much for supporting my YouTube channel. I'm trying to reach as many traders as I possibly can, and you're helping me do that by giving a thumbs up and by posting your comments. I promise I'm going to try and respond to all your comments. So thank you very much. Let's take a look at the recent trades that I put out from Sunday. Sunday's video, I mentioned to you the strategy is to find stocks with relative strength and to sell way out of the money naked put premium. Option implied volatilities have exploded, and this allows us to distance ourselves from the action and to take advantage of time premium decay and implied volatility collapse. We need to have the market find some support, and I believe that it will. But in case it doesn't, in case the market continues to drift lower, we've found stocks with relative strength. And in many cases, the stock would have to drop 25% more in 2 weeks for us to get assigned on these positions. I will take that risk any old day, especially if the stock has already been showing us some strength. So the stocks that I featured were PLTR, RKLB, IONQ, SMCI. SMCI, I believe, was the pick that I had in the last video on Sunday. Monday morning, I pounded these option implied volatilities, and you can see that from the fill price. So I decided to take profits on them, but I would leave one contract open just for this video. You can see here, PLTR. I sold the April 25th, $60 puts, way the heck out of the money. I sold them for $3.40. I think I bought them back for 60 cents, 65 cents. This is on Monday. And you can see they're still currently about half the price that we sold them for. That's that implied volatility crush that we're trying to take advantage of. I'm not losing any sleep over. I'm not even thinking twice about that trade. RKLB sold the $12 puts April 17th. They expired about a week and a half. Sold them at 50 cents. They're currently 5 cents bid offered at 22. This is that Susie Max oil tanker that you can drive through the bid-ask spread. That's one of the problems of trading options right now is market makers have spread those bid-asks out huge. But this is probably 5 cents to 10 cents. You can see we sold them for 50 cents. We're making huge profit. I reeled those options back in for pennies. SMCI, April 17th, $20 put, sold them for 60 cents. They're currently trading at a third of that value in 2 days. This is what I'm talking about. And the market has actually gone down. We're going to find a similar trade today. Taking a chaotic situation, a chaotic environment where, I don't know, is the market going to go up? Is the market going to crash? I don't even care. I'm taking advantage of these option implied volatilities, and I'm so far away from the current action, I'm not sweating it. I'm generating an income anywhere between 5 and 10% on these trades in 2 measly little weeks. So if you're buying options right now, you're a fool. You are paying for all of the uncertainty that's currently out in the marketplace. The dust will settle. We will have some clarity. I believe that a market bounce will be coming in here somewhere, but it doesn't really matter. If the market goes down another 10%, is the stock that I'm currently selling naked put premium on going to drop 25%? No, it hasn't even been dropping recently. Why would it? What's going to change? So let's take a look at the market. Going to give you a little bit of a market lesson here. I'm going to take off the after hours portion here so we can zero in on yesterday's price action. I put a video out before the open yesterday that you probably watched, and I had mentioned a gap and go scenario was most likely. Well, we pulled back initially, so that's already the first warning sign, because in a gap and go, you want to have green candle, green candle, green candle, nice size candles, nice volume to it. And then any resistance level you want to take out very easily. You can see this was the high from Friday. Could not get through it. Uh-oh, warning sign. This is a wimpy rally. Do you see how the candles are mixed and overlapping in tiny bodies? That is not a good pattern, because that tells us that sellers are nearby keeping a lid on the action. What we would like to see is nice, long, green candles like that on a rally with very little overlap on heavy volume. That tells us that buyers are taking every offer. They're lifting those offers. They want to get in. And when you don't see that type of price action, it tells you exactly the opposite, which is that sellers are keeping a lid on any rally. Well, eventually the market hits that resistance level and it can't advance. Uh-oh, first warning sign that the strategy that we were looking for, the scenario, I should say, that we were looking for yesterday, the gap and go that grinds higher all day, it's probably not happening. And what we needed to see as we were testing that resistance level is a nice long green candle through it. That alone would not be enough to get us into the position. We need follow through, because that breakout candle could easily be hammered right back down again. It just triggered some buy stops, and now the market reverses. So you have to wait for that follow through. If you don't get the follow through, it's like, oh, okay, well, that's probably a fake breakout and we're going to reverse. Well, we never even broke out. Resistance was there. We started to get long red candles. When we took out the low of the day, all bets are off. This is going to be a gap reversal. And so this is where you would initiate a short position when these green candles that surface are immediately, and I mean on the next bar, they're reversed. You can add to the position, because now you have confirmation that you're on the right side of the trade and that this gap is going to fill. Now, remember, when we were looking at the potential for a gap and go, market's already been sold off hard. Rubber band has been stretched super far. Chance of a bounce coming very, very high. You get that gap and go, and now you're marching higher, higher, higher with nice long green candles. In that instance, your confirmation would come off of a red candle that is immediately reversed on the very next candle by a long green candle that closes above the open of that previous red candle. So right here, same thing. You get this little green candle in here, and you can see how this red candle takes out the open of that green candle and it closes below it. That is your confirmation. And you want to see that throughout the entire move. So here we go. We got two green candles. Let's see if they hold. Let's see if we can get back to VWAP. We're trying. There's a bearish hammer. No. Okay, that's a sign of resistance in here. Lower high. No. Okay, now we can't even get back to VWAP. We take out this low right here. If you were conservative, you could have shorted here. If you were more aggressive, you could have added to your shorts up here. There's your breakdown. You add here. Confirmation along the way. So yes, We got a nice big sell-off yesterday, and the market closed on its low, and now overnight, we're also seeing some nervous jitters. So let's take a look at the D1 chart, and let's see where we might possibly find some support. So here you get your little mini bounce. We had this nice gap higher yesterday, and man, was that faded. Your best reversals today are going to be if you get a bullish reversal that's above this low. So you want to see that deep sell-off, and then the market starts to find support and it reverses. With this type of heavy selling pressure, it's more difficult for buyers to support a gap up unless there's some major kind of news. Hey, the Fed's going to be cutting interest rates. I certainly don't think that's in the cards. Or, hey, Trump is backpedaling on some of his tariffs and he's going to ease. That type of news on a gap up has the potential to hold. Every other news, we got to really watch the price action. And with all the volatility that's taking place right now, the one thing that you want to be mindful of is these wimpy early moves. That wimpy early move could be on the downside. And that tells you that, we're probably finding support here. There are some buyers, and the next decent move is going to be to the upside. And so when you're testing, this wasn't really a wimpy move, and we had some big news that came out during the course of the day. But when you get this little march lower and then all of a sudden you're into that gap, this is where your odds of a gap reversal are very high. And because you have this large initial market move to start off the day, the temptation by the programs and by traders is typically going to be to try and fill in that gap. And that's why it's dangerous to trade gap and goes, and gap reversals actually provide us with a much better risk reward, because if you get that gap reversal, look at all that room that you have to try and retrace and fill that gap in. So not a huge fan of gap and go formations. And when you get those gap and go formations, they tend to run out of steam after about 90 minutes. I'd mentioned that also in my video yesterday. So what do we do here? I mean, my gosh, we got China's going to be paying tariffs of 104%. This is going to roil the global supply chain, and the market's all over the place. It doesn't know which country is going to give in, and right now they're playing chicken. So what we want to do is we want to find stocks that have nice relative strength on a D1 basis. Ideally, those stocks have been holding up well. Why? Because they aren't exposed to tariffs right now, and the economy is still on sound footing. So we're going to run a search, and we're going to find another candidate that we can sell some out-of-the-money naked puts on. And I already gave you some nice tech names. Trying to think if there are any others, but IONQ is good. RKLB worked beautifully. You can take a look at those. If the market pulls back, you can consider those again. PLTR was a fantastic one. So yeah, those will all still work, but I want to give you something that's a little bit different and not necessarily tied to the tech sector. I don't know what the market's going to do today. I'm going to be watching it carefully. There's lots of news. It's very fluid. Trump is meeting with many other prime ministers, and they're going to try and strike trade deals. And these are, according to him, tailor-made. So if the deal isn't super attractive, he's going to send them packing. So at any moment, there could be news of a trade deal that swings the S&P 500 50 points one way or the other. I do believe on a monthly basis, we tested 480. If you draw a horizontal line across, it was resistance. We broke out, and now it is support. And that's exactly where the market found support earlier this week. So you can see the low is 481.80. I think 480, we should start to at least see some support here. The economy has not fallen apart yet. And yes, there is massive risk off right now. So asset managers are adjusting their portfolios. There's new information. The market is nervous, but we're not going to worry about that because our time horizon is 2 weeks. So we're keeping this very, very short term, and we're taking advantage of these option implied volatilities. You can look at VXX and you can see, look at those option implied volatilities and look at what they're doing this morning. VXX is up to 90. If we zoom out, you can see this is a level that we haven't seen since August of last year. And this was that big 10% sell-off that we had in a matter of 3 weeks. The yen carry trade was unwound. We're also seeing some issues in the longer-term bond market. And here you can see how bonds, there's an upward sloping trend line here that was breached to the downside. We had breakdown below the major moving averages, the 100-day and the 50. That is significant. You can also see that we have a big gap down in bonds overnight. Ouch. What's that all about? Well, we had a horrible 3-year bond auction yesterday. Very low demand for it. About 25% of our debt is held by foreign sovereigns. Well, if you piss them off, they're not going to want to buy our bonds. Plus, they're talking about what the budget might look like next year and the type of deficits that might be run. The long and short of it is that we have $9 trillion in debt to roll over this year. That is a huge number. You know, China's not going to be buying. They've been a net seller in the last few years. And you know that Japan's not going to be super excited if we start imposing huge tariffs on them. So the demand has been soft, and you can see we've got a lot of supply coming to market and very low demand. And that's what you get is a big drop in bonds, which raises interest rates, which is not great for economic growth because high interest rates are going to choke off consumption. And that is a big overnight move. Let's take a look at that after hours. And there you can see big sell-off in bonds. So I would tread very cautiously today. The trade that I'm going to show you is not something that you've got to pound out right early in the morning because of a huge bounce in the stock or a huge bounce in the market. We're going to see what happens this week. We do have banks announcing earnings on Friday. So JP Morgan Chase, Bank of America, Wells Fargo, I believe they're all on deck on Friday. We're going to need to watch bad loan write-downs. We're going to have to watch credit card delinquencies. We know they're on the rise. So those will be some tells, especially as far as what their guidance is. Now, earnings are coming up. I think corporate guidance is going to be this. We don't know. We have no clue. We've never seen anything like this. We don't know how things are going to settle out. There's an incredible amount of uncertainty, and we can't give guidance. I think that's what you're going to see. Companies are still waiting to find out how all this plays out. So let's know that there's lots of volatility still to come. Let's know that we want to do a relatively passive strategy that is neutral to very slightly bullish. And I'm going to paint the scenario to you. By the way, you don't need to trade options. Most of the time, I'm not even talking about options. I'm helping you focus on the market, and I'm helping you focus on finding the best stock, and you can just trade stock. There's no problem. Now, when you get situations like this with times of extreme volatility, if you're a stock trader, do nothing. Do absolutely nothing. But if you are an option trader, then we do actually have a really nice strategy that we can use right now. So I'm going to go in and I'm going to take a look at custom search, and we're going to be looking for stocks that have been strong relative to the S&P 500 on a 5-minute basis and on a D1 basis. Well, wait a minute. The market's been plunging That's right. We want to find stocks that have been finding support, that have maybe even bounced a little bit, or that are pulling back at a very slow rate relative to the market, because that tells us that buyers are in there supporting the stock. Okay, well, this is a list of potential prospects. We want to have good option liquidity. I used a value of -2. You'll be able to get 40, 50 lots done, no problem on the bid or the ask with this type of rating. Obviously, you'd be able to get much bigger size done as well. Price, I use $6 to $40. I want to use relatively cheap stocks. Please watch my Sunday video if you want more information on the strategy. Option implied volatility at the money. I'd like to have an option implied volatility of zero point 0.4 or higher. That tells me that those option implied volatilities are relatively rich. And in this strategy, I am looking to ultimately take assignment if that comes to pass. But I don't think I'm going to be assigned on these stocks. And I'm going to go right up to the top, because one thing that we can kind of lean into is the fact that Trump is doing all of this to bring manufacturing back to the country. And the one thing that he has been steadfast on, even during his first term, is that we need to produce steel in the United States for security reasons. If for no other reason, we need to produce steel in the United States. Okay, well, one of the ways that we can play this is to look at steel companies. We can also take a look at BTU, which is one of the largest coal producers. He's also into clean coal. So if push comes to shove, he knows that we need the coal. He knows that we need the iron ore. We want to produce steel domestically. He's going to be placing tariffs on incoming steel. So that's going to make companies like X and Nucor relatively attractive. There should be support in these stocks longer term. Shorter term, they're going to be fighting the threat of a recession, but that's not going to be a bottom falls out. These stocks have already accounted for the fact that there's probably a recession coming, and these companies are going to get some support from the government if they are losing money while his plan takes time to gain traction. The government's going to be in there supporting them in whatever way they can. That's the underlying premise. But we can just take a look at the stock technically, and we don't even need to have all that mumbo jumbo that I just mentioned. But, in times of uncertainty, it's good to have additional information. So we're going to take a look at BTU. I'm going to move this off screen, and let's see what the stock has been doing. Hey, whoa, look at that. The overnight session, the market is selling off hard, but this stock has actually been going up. There's the market. There's the stock. Now, yes, it's pulled back a little bit, but look at that on volume. Hey, there must be news. I'm sure it's related to tariffs, and I'm sure it's related to Trump. Let's take a look at the daily chart. So here's your daily chart. You can see that, yes, BTU has bounced off of this deep low. What was that low? Well, that low was $9.61. Okay, I'm going to hover over that again. $9.61. And the stock is looking to move higher today. Okay, would I be a willing buyer at $9.60? Yes, I would, because I'm seeing that there's some recent strength in here. And during a market bloodbath, this stock has actually held up really well. You look at what's happened in the market over the course of the last 4 days. Yow! Look at that drop. From that close of 536, we're down about 500 S&P points. What has the stock done? It's up. There are buyers here. There are people going into these stocks because they know that there's safety for exactly the reasons I've mentioned. So you can pick it up technically just by running a search like that. So now we're going to take a look at what those option implied volatilities are. This is probability-based trading. is probability based. And if you can't get the odds in your favor, you don't trade. You wait for clarity, you wait for those odds to increase. And so for overall stocks and overall market, I don't know what it's going to do, so I'm not going to be trading them, but I will do this strategy. So we'll take a look at the $10 puts, and we're going to go out to the April 17th expiration. So this is Wednesday, the 9th. We've got a week and a half that this trade is going to span. A week and a half. So the returns that we're going to generate on this are going to take place in a week and a half. We're going to take a look at the $10 puts, and the $10 puts are currently bid at 37 cents. Now, the way that you need to approach this, if you're selling the $10 put, you need to put $5 in reserve. Because if push comes to shove, you want to be able to buy the stock on margin. Let's say that we're able to get 50 cents for these puts today. Okay, I've got to put up $5. That's what I'm having in case I have to buy the stock, and I'm bringing in 50 cents. That's a 10% return in a week and a half. Yeah, but Pete, I don't know. I'm awful nervous about this. That stock could pull back. It's already been down there. Right now, based on where the stock is overnight, we're talking about a 20% pullback in the stock, okay? The stock is at $12.73. Are those options going to open 40-cent bid? No, they're not. The stock is already trading higher, okay? But we've seen lots of volatility in the marketplace. We've seen stocks gyrate up and down. Who's to say that this isn't going to revisit yesterday's close? It easily could. All we're doing is we're sitting in the wings and we're waiting, and we know the price that we'd like to fetch for these puts. So we sit back and we watch what the market's doing today. And if those puts get to our price target, we're going to take it. We're going to sell those puts, and I'm going to say, hey, you know what? If you give me a chance to buy the stock on that low, it's not even where the stock closed that day. It closed at $10.31. If you let me buy the stock at that low, I'm going to do it. And so if you sell those $10 puts for 40 cents, your net cost is $9.60 on the stock if you do get assigned. And the stock can pull back about 20%, and you're still okay on the trade. So the stock can pull back, you're still okay. The stock can stay flat, you're still okay. The stock can move higher, you're still okay. Under all these scenarios, you're going to stand to make 10% if you got 50 cents for them. You might make 7 or 8% if you settle for something less on those $10 puts. That's the trade. That's how I would be approaching it. Lots of news coming out, lots of uncertainty. We don't know where everything's going to be flying around and what's going to be happening. But in this particular case, am I willing to bet that in the next 7, 8 trading days, that this stock is not going to drop more than 20%? If the answer to that question is yes, I don't believe that's going to happen, then this is a great strategy. You put it on, you don't even think twice about it. You don't even worry about it because you know you're a willing buyer of stock and you've got the money in reserve to do so. That's the type of strategy that you should be looking for, or just stay sidelined. Let this volatility pass, and then we'll have clarity perhaps within another week or two. Earnings season is going to be coming out, and we'll see what CEOs have to say. But I believe they're going to be painting a fairly bleak picture with lots of uncertainty. As long as these trades are out there and as long as they exist, I'm going to be doing them. And you don't see this opportunity very often because that is a massive market decline. And that is when those option implied volatilities get really high. So by all means, please, a couple takeaways for this video. Do not buy options. Oh my God, you are paying so much in option implied volatility, and those bid-ask spreads are so wide, you can drive a truck through them. So they're difficult to get into. They're difficult to get out of. Your strategy should be to sell option premium. You can do spreads and debit spreads, but even then, you're buying expensive option implied volatility and you're still selling expensive option implied volatility. And it's hard to get in and out of spreads because the bid ask is a mile wide. So you can't even get out of the transaction. And the market makers right now rule. They are dictating the entire game because you don't know where your spread order is being routed to. And they'll look at it and they'll look at it, but they're not going to fill you until it absolutely, positively, 100% is in their favor, not in your favor. So keep your trading really light right now. There are going to be some intraday opportunities. I am trading stock, not options. And so if you don't have a big account, you can run searches, exclude anything where you've got stocks that are trading above $200 and focus on stocks that are trading between, say, $50 and $100. You're going to have plenty of liquidity there, plenty of price movement, and you'll be able to do a decent number of shares. That's how I'm approaching the market right now. Thanks so much for watching. Please give the video a thumbs up and please spread the word. I will be trying to get a video out tomorrow morning, Thursday morning. I'll make it really quick, I promise. Thanks so much.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.